All right, guys, it's Friday, March 31st, pre-market prep. We got a lot to cover, and hopefully Vegas will be with us at 9:15 p.m. as well. Okay, first, I want to cover some macro stuff. All right, let's just first look at the chart on QQQ. You can see here we're still above that key level we're talking about yesterday, 315.25. So it looks like a nice breakout, nice clean breakout in QQQ right now. All right, and let's see where the SPY's at. The SPY as well above the key moving averages. So things are looking good as far as the major indices and the big cap goes. Okay. But I think there was some PCE number that was in line this morning. I actually didn't catch that, but I heard something about it. And but I'm a little bit worried. All right. We've seen since this regional bank crisis, we've seen this this kind of flight to safety, like this money rotation. Where's the money going to go? Because people are worried about credit crunch. First, it went to Bitcoin, if you remember. Then it went to gold. There was a day in there when it went to bonds, TLT. And then finally, they settled in on big cap tech. It's only about 5 or 6 stocks that are holding up the entire market. Otherwise, we'd be down. All right. So I worry about this flow, and I think it may be unsustainable. This banking crisis is catching up to us. First of all, let me just tell you, look what happened to MCB Bank yesterday. Remember I said that shorts are going to circle, look for the weakest banks. Well, yesterday they put out some short report on this, tried to get this to go under, because this is what can cause the bank runs. When consumers see in the news that some stock is down 80%, whatever it is, that can cause a bank run. They tried that yesterday. Company came out with a statement in after hours last night saying, hey, everything's strong and our situation's good, and now it's bouncing back. But this tells you how dangerous the situation still is in the regional banks. Now, there's also some geopolitical stuff that's making me a little more bullish on gold. I already like gold since the banking crisis, and the chart's pretty good here. But there's a couple events here just this past week, which I think is giving a sentiment tailwind to possibly causing this to break out properly. Look, we're at like almost like a triple top here, right? So we'd like to break that triple top and head into the 190s. So what are the two things? There's two things. First, there was news between, well, maybe three. What's going on with China and the rest of the world? China and Brazil are getting aligned. They're looking to trade currency outside the US dollar. China and Russia are getting closer. So there's a lot of geopolitical things going on. And at the same time, now, listen, I'm going to get into a little bit of politics, and I think we can make an objective assessment. Hopefully, we can all agree on whatever aisle you're on, whatever side of the aisle you're on with this indictment of Trump yesterday. You know what that looks like to the rest of the world? At the very minimum, we can agree. Okay. And when you have internal conflict in the United States at this level, I'm not going to get into the details, but the rest of the world, they see that, and that could bring America down in reputation-wise in the rest of the world. At the same time, where you're having China and Brazil aligning, China and Russia aligning, all these things, plus put in this kind of, I think, maybe unsustainable money flow into big cap tech, even though the technicals look good for today, right? I'm thinking, where are you going to hide? Maybe gold, all right? I don't know. So actually added a little bit more gold yesterday. And that's from a macro perspective. One other thing that I want to talk about, credit crunch. We're going to start looking at these specific stocks. So we're talking about the regional bank crisis and the credit crunch. It's starting to take victims. Look at these 3 stocks right at the top. NKLA has to raise money. They raised money at $1.12. Look at the stock crashing. I was surprised why it was above $1.12 this morning, and now you see it really didn't deserve it. It's going down towards that $1.12 level. Look at this stock. Used to be an $80 stock. Next one, Chicken Soup for the Soul. They had to raise money here at $2.30, I believe it was. Okay, let's see. What was the price? Yeah, I think it was $2.30. All right, and that's trading below the offering price. And now you see this company, VORB, they're going out of business. They couldn't raise money. They needed money. They couldn't raise money. They raised a little bit of money to pay severance, and they've fired 90% of the people, and they're ceasing operations. This is the environment we're in. I've been talking about this for a long time now, and it's a very, very dangerous situation for not only microcaps, any company that needs financing to get to cash flow positive is very dangerous situation right now in the market. And you got to be careful about what you're invested in from that perspective. Be real careful. Now, on the flip side of that, you can have positive catalysts when that's addressed, like we had with GSAT, right? We gave you GSAT with a target of 120. when it broke that 110. And this is because it got $200 million in non-dilutive financing, and that they're saying can help them get to profitability, should be able to, fulfill all their capital needs. So that's what's going on here on GSAT. So you can play that to your advantage. Just send one more reminder, make sure people can find the show here this morning. All right. Now I'm going to talk about this theme a little bit more as we get into RUM and FAZE here. So now we had earnings on RUM, FAZE, AIR, GOEV, and then we'll get into big cap techs as well. RUM crushed earnings. Okay. 20 million versus 10 million. I think their loss was a little bit more than expected as well, though. But the real story here to me is they have over $300 million in cash. They have 4 years of cash on their balance sheet. Very strong position. And in fact, one of the analysts said, well, given the macroeconomic conditions and the credit crunch, I assume you're out there looking for acquisitions. And they said, yes, we're actively doing that, right? So this is, the story of the haves and the have-nots. And believe it or not, RUM is one of the haves here. They have money, and they're out there looking for acquisitions. Now, why did this go down? Last night, this thing rocketed to 12, and there was a turning point on the conference call. That turning point on the conference call was, hey, for Q1's almost done, and we can tell you Q1 revenue is going to be somewhat lower than Q4. Why? Because Q4 they beat big. It was above expectations, but it was largely due to midterm elections, and midterm elections brings a lot of eyeballs because there's a lot of political content on RUM, and that's what set the stock down from 12. It started going down, because at first it was trading on the excitement that, wow, they're going to sequentially grow every quarter, and if I can annualize 20 million, these guys are right on track. They're just exploding. And then they threw that note out there that you can't annualize those earnings. We're going to have a somewhat of a drop in Q1. Now, that's so it covers some of the positive, some of the negative, but there's one more positive here. For those who think that this is just about political content, look at the traction they're having in the sports area. Let me see if I can find that news. But recently they had this thing with some Slap. I think the competition was called Slap, some sort of a sports thing that used to be on ESPN and now it's on Rumble. And then last night, together with earnings, let's see, where is it? All right. Over here, Rumble locks in 2 additional sports leagues and emerges as the leading platform for live streaming action sports. Okay, so they've added also yesterday announcing they added Nitro Rallycross, Street League, skateboarding, and then it was Power Slap. Right, combined with the previously announcement of Power Slap. They're also saying the UFC has made an official channel on Rumble. So they are going into a lot of these different areas, and this is generating a lot of views, by the way, millions upon millions of views on some of these programs. So a lot of positive things going on for RUM, but right towards a gap fill. Let's see, we have support at 10. I'd like to really see 10 hold, all right? If 10 holds, I think this is going to be tradable today. But overall, I think the news is really good. If you look at it on traditional valuation metrics, this is going to be a battleground stock, okay? The best way to play this, if my fund was open today, it's opening in a few weeks, I would just be selling volatility on this one. All right. That's the way to play. Now, my personal account, I don't, I have a different thing. It's totally different on my personal account. I believe RUM, I'm behind it. I want them to succeed. I want to own part of it. It's a totally different mentality when you're managing other people's money. The safest thing to do here is sell volatility. Why? Because the downside's limited. The downside's capped with that strong cash balance that they have and this very strong revenue growth, right? So maybe it's not going to fly. Maybe the stock's not going to fly, but it's also not going to $5 anytime soon. And if you look at the premiums on this stock, on the options, they are enormous. And there's excellent opportunities to make money, both selling calls and selling puts on RUM. And that's the way to safely play it. But if you want to trade the stock, like in your personal account and take on more risk, which I like to do, I'd be maybe looking at buying the stock at $10. I already have some of my IRA. Maybe I'll buy more in my IRA. I think that was a really good report. All right. But from an institutional perspective, the best way to do this, real great opportunity coming up with this volatility and with the floor in the stock price, with the strong balance sheet, is probably to sell options on this baby. RUM, that's the way to go. All right. A couple more updates. Oh, tale of two stocks. Look at this. FAZE. FAZE, believe it or not, look at RUM. RUM's like a $2.5 billion market cap. Okay. There's a $2.6 billion. All right, RUM's at 2.6 billion, FAZE's at 42 million. Guess what? Their revenue was similar and their operating loss was similar. Yet RUM is valued so much more. Now, there's two significant differences. One is the balance sheet. FAZE has like 40 million cash, and they're going to have to raise money towards the end of this year, maybe in 2 quarters or so, maybe less. You'll probably see an offering out of FAZE. RUM doesn't need an offering. One major difference. The other major difference is now sentiment and the perception of the TAM. Okay, so obviously, I believe that you're seeing a huge premium in RUM because the sentiment is very high as it relates to the TAM and their growth prospects as compared to FAZE. So two similar financial metrics, but two totally different valuations when you consider sentiment. And that's how we do it at StoryTrading to understand price action. All right, now we're looking at AIR. AIR had earnings last night. I read through the conference call transcript, and I got to say I'm pretty impressed. First of all, a couple items of news. That thing that Tesla, the announcement they made about reducing silicon carbide did not come up at all. No analyst talks about it. Gain didn't talk about it, which basically tells you that press release that they put out after that event came, everyone bought it and they're comfortable with it. Okay, that's point number one. Point number two, they have a lot of irons in the fire. This company is on the verge of becoming extremely diversified. Okay, they have lots of, the silicon carbide. They're going to have lots of customers in silicon carbide that's coming up. And then now they're talking about gallium nitride, which is kind of a new conversation that now gallium nitride looks like it's going to be leapfrogging silicon photonics in terms of revenue that's going to come in. Now, silicon photonics, even though they do have like 5 or 6 companies testing it out, it looks like he was downplaying it. And he was talking about that this is really going to explode late in the decade. When we previously interviewed him, he was talking about like 2024. And he didn't say anything about 2024. I don't know if he's just trying to lower expectations and beat them later, or if something changed as far as the timeline for silicon photonics, but they are actively being tested. So they have a lot of things in the fire, both in terms of market segments, silicon photonics, gallium nitride, silicon carbide, and also in terms of diversification across lots of customers. And there's also big talk about China that they're going to get into. They're trying to get into silicon carbide in China EV market, which could be huge. So now, if you look at the valuation, they did about, I think it was 17 cents EPS, 14 cents. If you annualize that, you come to about a 50 PE, which is dropping rather quickly, right? This is a trailing PE. Well, kind of trailing. We're annualizing it. But 88 PE trailing, now we're at like a 50, 55 PE. If you annualize last quarter, this is starting to look less and less expensive, particularly with the diversification and different industries that they can get into. Now, unfortunately, on that Tesla news, I did end up selling 75% of my shares at $31. Actually, all of them at $31, but then I bought them back after things calmed down, bought 25% back at 31. But look, I think this is a solid company. And also, here's another example of a stock with very, very high options premiums that perhaps in this volatile market, perhaps that's the best way to play AIR. If you kind of look at that PE of 55 and triangulate it with the chart and the history of the chart, I'm thinking this 20 DMA might actually hold. And in the past, when it's dropped below the 20 DMA chart, no, that's the 20 and 50 are right on the same spot. That's why. Okay, so any drops below the 20 or the 50 have been short-lived and they've been buying opportunities, right? It's been right here in December and a little bit right here in early March. Is that? Oh yeah, that's that Tesla news day. Wow, time flies. Okay, so I think this is a solid company. They really grew up and they probably deserve their $1 billion valuation now. Unbelievable. All right, that's the story with AIR earnings and GOEV uninvestable. Okay, GOEV had earnings. They're in a big cash hole. Now here's the one. Maybe it's not crashing if you take the company's word for it. They had something with the SEC, which was settled for $1.5 million. And now they're saying they're eligible for some non-dilutive financing from the government programs for EV. They're looking at getting loans from there. They also have an active ATM running. But look, I am completely staying away from any stock that needs to raise money. And that takes us right up to the big caps, right on time. It's actually good. I left the big caps to the end so I could talk about it with Vegas. Here we go. Good morning, Vegas. How you doing?
Good morning. How are you? I'm doing great. It's Friday.
All right, doing great. What's on your list? You see at the top of my list, I got Microsoft, Tesla, Babo, McDonald's. What are you looking at
hmm
today?
Well, you mean for day trade?
Yeah, day trade. Let's start. Yeah, let's do
Well,
that.
let's start off with day trade because swing trades. I'm already in Baba. I'm already in Tesla. I'm already in Amazon. So I'm not going to keep repeating the same trades because those are still in play. So for day trade in particular, let's keep a watch on Amazon today. It's getting ready for a move, and we have an active swing here on Amazon. So I do like to day trade this one today because the momentum's there and nice volume. So I'm going to be day trading Amazon if it gets over this 102.44 and want to see this head towards 104, 108.
Mm-hmm. Mm-hmm.
And also be watching what's the other one I was looking at? I'm gonna watch
Nvidia.
Boeing. They
Oh,
had the news on Boeing. If it gets over 211.55, which it's at right now, this has room to like 215. So Boeing's a good one. And
what was the news there? Five additional
they
Dreamers.
had yeah, no, they had additional aircraft. They also
Mhm.
mentioned something with their cash flow. So yesterday, so there was some good news there
Okay.
yesterday. So Boeing
Cool.
looks good. And then the other one to watch is watching um, Nvidia. Everyone's watching Tesla. They want to see $200 break. But
Yeah.
honestly, for day trade, you're fine to take a trade over 197.
Yeah.
Your stop would be like 193.50 in my opinion, but bullish over 197 for day trade. And you can go long on Tesla over 200. If you're doing options, you can go long, or you could still hold the stock if you're trading the stock. So looking for that type of continuation. Um, on Tesla, but I'm already in Tesla, but I will look to day trade it too, over this 197, and that's it. So I'm just gonna watch Amazon, Tesla. Baba is an active swing. For day traders, you'd need to see this get over 106. So
Wow. All
it's
right.
not really ready for a day trade yet, unless you take it from like a reversal perspective. But my top watch this morning for a new swing is Apple. So Apple's getting ready. We see pre-market. It did get over 162.50. So it did go to 162.80. It is ready to break 162.50 at the open probably, and Apple swing will be in play. My target on Apple's 170, so I will be going long on Apple. So getting
Wow,
ready for
that's not
really
far. That's not far from an
Apple
all-time
and
high. Can you
Amazon.
believe it?
Yeah,
Yeah.
I'm not surprised.
All
I'm
right.
not
Well, look,
surprised.
I got a couple. Those are good stock, good charts. I like them
Mm-hmm,
all.
mm-hmm.
My top two coming in to the show, though, was Microsoft and Tesla. And let me show you why I like them. Microsoft yesterday was the strongest
Mm-hmm.
of all the big caps. If you look at how it closed at the end of the day there, it's like you see a kind of V pattern there, closing at the
Yeah.
day, and it broke out, was above all its key levels. So, it looked like out of the ones I was monitoring, this had the best breakout
Yeah,
potential
Microsoft was
yesterday.
triggered on Wednesday, like to go long on
Yeah.
Microsoft. So
Yep.
you're
So I
in it
kept.
already, or you're looking to
Yeah,
trade
yeah,
it
I'm in it.
again?
I kept it. I was in yesterday, but I kept it overnight. Actually, I added
Okay.
some at the end of the day when I saw that strong chart.
Mm-hmm. Mm-hmm.
Tesla too. I continue to really like Tesla, although this has a little bit of work to do. I think maybe 197. What's I have to break? Maybe 197.40. I mean, it's almost there. It really looks nice to me.
Which one?
And
Tesla?
yeah, yeah, yeah.
Yes.
The
Okay.
QQQ keeps going, right? If the Nasdaq keeps going, I think there's a good chance this heads to 200 to 217.
Yeah, that's my target, 220. So we're good.
Yeah,
And also, let's keep a watch on for Microsoft in particular. I like it over 285, and for anyone that wants to go into a swing with option contracts, I would consider 290 calls
yeah.
for April 6th. Okay. The other one too is watch Netflix. If it breaks 340, 329, we had some nice power on Netflix this morning. It's gapped up nice over $4 overnight. So if it
So
gets
so let's do
over.
this. I see a
Mhm.
theme here. And before you go, let's look because all of these are really, I think, moving on the strength of the Nasdaq. So let's look at Nasdaq and tell me what you see here.
Are you pulling it up?
Yeah, it's on my screen.
Oh, it's there. Okay, yeah. Well, listen, I'm going by QQQ as well. Like the Nasdaq's looking really strong. The QQQ to me is extremely strong as well. So no surprise, and especially like we have heavyweights like Apple and Microsoft leading the way today. And we know that Apple's been a little bit behind, but I think it's catching up now. So I think with those two in particular being really strong, we should see some really nice sentiment in the market. And the market has triggered an uptrend. So there's no reason right now to be bearish. So in my opinion, it's time to get in the market or increase position sizing. Like some people have been, let's say on the defense where they're still trading, but they're not trading as heavy. But now it's time to increase position size and start, to obviously capitalize on the opportunity. So, and we are closing the quarter. Today's the last day of March. So it's the month end. And next week's new week, new month, new quarter. So look forward to some new excitement in the market. So really look forward to some more fireworks next week.
Yeah,
I think it'll be really exciting.
I'm with you. And I think as I covered, you missed it on the top of the show, but I think you got to stick with the big caps right now. The micro caps, not even micro caps, any company that needs to raise money, they're getting slaughtered. Some are going out of business. VORB went out of business. NKLA down 10% on offering. Chicken Soup for the Soul down 30% on offering. I think you got to stick with the big caps. You have to stick with the big caps.
Well, that's where the action
environment.
is. That's where the action is.
Yep.
So got to stay at the large caps. You'll see over time, large caps is where the real money is.
Yep, absolutely.
That's great.
All right, Vegas.
Okay, guys, have a great weekend. I'll see you guys on Monday.
Take care. Have a great weekend.
You too. Bye-bye.